All right, so page 13. We're going to talk about property insurance. Have a highlighter ready as well. Just a reminder that all of the booklets, the 3 booklets that you need, right, the thicker one being the most important one, the notes, but they're all outside my door still. Okay, so I think I'm going to do it one last time today. If after today you're still planning on coming by to maybe catch up on the notes, because I'm posting the videos, right? Let me know, like message me, email me in advance so that I can maybe leave you a package outside, right? I mean, you can also just come by and just knock once. If I'm here, then you can gladly, I'll give you the package, but maybe try to come by today and pick those up, okay? Because it's much easier to just have the booklet and fill in as opposed to actually writing it all out on loose leaf, right? Okay, so property insurance. Insurance, I'm sure you already know that what that means is, right, it covers you for potential damage. Your house damage. So damage made by fire. It could be damage by flooding. It could be damage by a storm. It could be damage done because for some reason when your roof was done, it wasn't done properly. So sometimes there are small leaks and that happens year after year. The snow melts, it's leaking in. You're just not noticing inside the house, but it's leaking into the attic of your home, and mold will occur, right? Mold will build up. It's also covered by insurance. You got to claim it, right? Of course, you got to make a claim. And so I think you understand how that works. It's similar to car insurance. What you probably most likely didn't know, it will be news to most of you, there's also insurance for apartments, for tenants. It's called a tenant insurance. It only covers the contents of, like, your contents in that apartment. So if there's ever a fire, I don't know if you follow the news, but in the Bronx, there was a big fire, right? That apartment fire. If your property's damaged, so anything you had inside, jewelry, electronics, whatever, it would then be covered. Your contents are not covered if there were to be a fire in the apartment block. Your contents are not insured. The landlord will not cover those for you. So in the apartment, the landlord has insurance for the actual building, but not your stuff, right? So that's where you go get a tenant insurance package. And you know what? We're talking maybe $250 a year for that insurance. So if you can go get it, it's 20 bucks a month or 15 bucks a month. I think sometimes they're less. It depends on how much you're insuring. I would strongly recommend you do that. Another reason you want to get tenant insurance is because if you are the cause of damage, so let's say for some reason you turn on your bathtub, you turn the water on, you walk away, you forget about it, and for some reason it just overflows and that water goes to your neighbor underneath you. If there are any damages, you are on the hook for that, okay? Because you caused that damage. So your tenant insurance would have covered that, okay? So I hope these are important life lessons that you want to, right? Hopefully you will never use it, right? Car insurance, hopefully you'll never use it, but you have it in case that happens, because you don't have the money to pay for those damages, right? Because they can be substantial. All right, so property insurance, we have 2 types in this unit, right? Tenant insurance, it protects renters from loss of contents, right? Loss of contents and personal belongings, right? That's what it covers. Example 1, I jump straight into an example here. Joey rents an apartment, so there's that important word that will tell you that this is a tenant insurance. He calculates that the value of his clothes, stereo, furniture, and other possessions is $25,000. So you're always doing an approximate value, right? You probably don't know exactly. So they'll ask you, how much do you want insurance for? So you probably do like the math on the big items, big ticket items you have, right? And then add it up, and you go a little bit overkill, right? Like you're not going to be like, well, all I have is $3,000. No, you go 20,000, 25,000 just in case, right? He wants to buy a tenant insurance package policy with a $200 deductible to protect against financial loss in the event of a robbery, right? Even if if they break into your apartment, it's covered, right? He chooses the comprehensive plan, find his annual premium, okay? So here we will start calculating right away for tenant insurance. So this is on page 13, okay? Let me just get out my a note that I want to make on this part here. This is fairly new. The provincial government introduced this a little while ago, so we'll add that here. So new, add that to the top corner. Insurance is taxed 7%. That's the PST in this province. Okay? So insurance after tax, multiply by 1.07. You know how when we found the cost of a car after tax, we multiply by 1.12 because taxes are 12% combined, right? GST, PST. Now we're just going to multiply by 1.07 because in this province they tax. So if I ever ask you for the price or the cost of insurance after tax, at the very end, we're going to add 7% taxes to it, okay? All right. Now, I need you to grab the table. This is going to be important, this table right here, the orange looking one. The first page, look at, I don't know if you have this one pinned where I am on, right? The first page is all about mortgages, right? Those are the rates you need to find out the monthly payment. When you fold it open, I will zoom out a little bit for this, just to show you. You zoom open, there is a tenant package policy. So this is, whenever it's talking tenant insurance, we're going to stick to this one here, which is a lot smaller. If the next one we're going to do is homeowners insurance, right? Homeowners insurance, we're going to use this. If it's a house that somebody wants to insure, or a condo, if it's something you purchase, if you're the owner, we want to use this chart, okay? So for now, we're sticking to the tenant's package policy. So I'm going to zoom into that and watch what a couple of things I want you to know. By default, standard, right? Our insurance rates are going to be based on a $500 deductible. That's why I circle that, okay? We're going to be based on a $500 deductible. What is a deductible, you might ask? Maybe I'll add that straight to your chart here. What is a deductible? The amount you pay when making a claim. Okay? Deductible is the amount you pay. If you don't have this chart, if you're doing this on loose leaf, just write it down somewhere on there so that when you come back, you know what a deductible is. So that would be the amount you pay if you make a claim. So, a branch broke off the tree and smashed my window. Windows are expensive, right? Depending on which one it is. Uh, let's say you do some research and you figure out, you know what, to replace that window is $400. If you have a $500 policy, I would not make a claim, because let's say you make this claim and they're like, well, you got to pay us 500. Like, you have to be responsible for $500 no matter what. If you make a claim, it's $500. Now, two things happen. You're gonna have to pay the deductible, and your insurance is gonna go up for a couple of years because you made a claim. You're at a higher risk. Okay, to them, you represent a risk, like, oh, you're actually going to use the insurance, we'll charge you a bit more. Okay, so that's why the deductible is a bit higher, because they don't want you to really make claims unless it really needs to be done. Like if your roof if something happened to your roof, that's thousands of dollars. I would not have a problem paying the $500 to make the claim, right? So it's very relative, but they don't want you to just make a claim for just anything. Okay, there we go. So $500 deductible, and then watch what it says here. The things you need to watch out for. You need to consider the coverage amount, right? Like how much do you want to be covered for? And notice that it starts, the minimum is 25,000 and it goes all the way up to 75,000 here. It stops there on the chart. But what do you notice? It says if you go up for each additional $1,000, you're gonna have to pay more. Like, and here are the rates: $4.50, $4.50, and $5.50 for every $1,000 of insurance that you want to go above the 75,000. Okay, so let's go back. So the coverage amount is huge, and then you have standard form and comprehensive form. What is that? Okay, I'm going to talk a little bit about that right now. So standard is just like a broad insurance, they call that. Standard is just, it covers just your basic structure and just the house itself. Okay. Whereas comprehensive covers the structure and your belongings. Okay, so comprehensive is the better one, really. Like it's almost like a peace of mind kind of insurance. So standard is also called broad insurance. Comprehensive is just, it covers everything pretty much. It even covers if you, I hope you're listening because this is good to know. Let's say you have like a $3,000 professional, one of those cameras, those fancy cameras to take awesome pictures. You're traveling and somebody steals it, or you miss, like you lose it, it's gone. $3,000. That's not even a joke. Like, those cameras are very expensive. I'm telling you this because it happened to someone I know. They were able to make a claim under their home insurance for that stolen camera, because technically it's part of your belongings, right? So $500 deductible is okay to get the money back for that $3,000 camera. Okay, so that is pretty good. It covers jewelry, right? If you have expensive bikes, like, they would be covered under comprehensive. Okay, so standard is, the name says it all. It's like, it's just basic. Comprehensive is like a deluxe, or like goes beyond. Okay, so the coverage amount comes at play, as well as, are you picking standard or comprehensive? And look at the pricing, right? For a $25,000 apartment or insurance that you want to cover, or you want $25,000 worth of coverage, I mean, it would cost you $158 per year. That is, it's always per year. Everything you see here is per year, versus $200 per year if you wanted comprehensive. So comprehensive is, it's more. Okay. All right. Watch this here. This is important. If you want a $200 deductible, that means that, right? Like, just think about it. $500 deductible is like your basic, what you get from the start, from the chart. If you rather want a $200 deductible, meaning you would only pay $200 if you make a claim, we just increase the premium. So we take any premium here and just add 10% to it. If you add 10% to it, then it's now going to be a $200 deductible. So think about it. You would pay less when you make a claim, right? But they're charging you more per year. So it's kind of like a trade-off a little bit. I personally would just keep it at 500. My personal, like my home, I have $1,000 deductible. You're like, what? $1,000? Yes, because this isn't quite necessarily, these aren't the only options you have. You have various options. And the higher your deductible, the less you pay every year for insurance. And the reason being is I just want insurance for like major damage. I will take care of anything less than that. Okay. All right. So let's go back to this question. We live in an apartment, so we need to use that chart that I just showed you, the tenant insurance. We want $25,000 worth of coverage, and we want a $200 deductible. I'm going to highlight the deductible as well. Yeah, to protect against financial loss in case of robbery. And he chooses the comprehensive plan. Okay, so how would you do this? The first thing I need you to focus on is the coverage amount and versus if it's standard or comprehensive. That's the first thing I want you to check for. So we're going to write down $25,000 and we're checking for comprehensive. Right? $25,000 comprehensive. That gets you an actual number. Okay? So we're going to say $25,000. We want comprehensive. That's $200 according to the chart. So you write this down. $200. This would be a $500 deductible, right? This would be your yearly premium. It's a $500 deductible. But the question doesn't ask for a $500 deductible. It asks for a $200 deductible, right? So you take that 200, and it's a little bit confusing. The 200 is a little bit confusing there, but you take that 200 and you multiply it by 1.10 because you're going to add 10% to it to make it a $200 deductible. And this one you should be able to do in your head, but just in case, 200 times 1.1 or 1.10, that's 220. This is what they want in this case, $200 deductible. Okay, so it would be $200 a year under a $500 deductible policy. It's $220 because you want the $200 deductible. And I will say per year. Okay, per year. It's a little bit crowded there. I know I should have left a bit more space. So that's tenant insurance. I think I want to take a little pause here. I'll give you the formulas later. Okay. Anyway, so here we go. Let's keep going. Homeowners insurance protects homeowners, condominium owners, and tenants from fire, burglary, or storm damage. Right? Covers contents, building, and liability. A liability is like if for whatever reason, let's say you're renovating your home and for some reason you hire like a bobcat to go in between your house and the fence, and somehow the bobcat bumps into the fence and the fence falls over and maybe causes some damage to your neighbor, right? That's liability insurance, so that's also covered. Deductibles are between $200 and $500. I will add that in real life now also $1,000 deductible. But we won't deal with 1,000 here because our chart doesn't have that. Premiums increase based on the number of claims. Policies can be comprehensive or broad, right? aka standard. And we will talk about discounts in a bit. Use insurance rate tables for these types of questions. Tenants insurance, insurance for people renting a house or an apartment, because you could be renting a house, right? Covers the contents of the home and apartment. House insurance, insurance for people owning a house or condominium, covers the contents of the home and the building itself. Okay. In general, that is what home insurance does, right? Lending institutions will not release a mortgage until proof of property insurance is given. That is big, okay? If, before you get your mortgage, your bank is going to want to see proof that you actually are getting insurance for that home. Because if there's a fire and that house is gone, I doubt it that you're going to want to keep making your mortgage payments, right, for a house that you just lost. Several factors include the cost, type, and amount of insurance you purchase. Some of these factors include, right, your location. There are 4 areas in Winnipeg. There's Metro, Area 2, Area 3, and Area 4. Don't worry so much about that, but the insurance companies kind of know which houses are more at risk, which houses are very close to a fire hall, right? It would take less time for the fire department to get to you. They know which houses are far away from a fire department or fire house, right? They also know if there's a fire hydrant close to your house, because if there's a fire hydrant close to your house, then the firefighters have access to water, right? Coverage, is it broad, right, which is lower, versus comprehensive, which is high. Deductible, $200 deductible, that would be a high, the highest, right? Then there's $500 deductible, which would be lower. Okay, and I'm not going to talk about $1,000 here because it might confuse you. Deductible is the amount you have to pay when you make a claim. There it is again. I will highlight that. Discounts. You get discounts, and make sure you mention these, right? If you are claim free, like if you have never made a claim or you haven't made a claim in 5 to 10 years, you're probably going to get a discount, okay? If it's a non-smoker home, monitored alarm system, okay? If you have a monitored alarm, like it's actually hooked up to send out a call, you will get a discount, okay? Good credit, I will put that, also reduces your insurance premium. I actually use that, but if you have a good credit score, you're gonna get a discount because the companies, companies notice that if you pay your bills on time, you're also a responsible homeowner. Therefore, less likely for you to make a claim. Okay, because you take care of the house, you make sure everything is in working order. Okay. I guess if you followed the news, the Bronx, that fire, it was started by a heater, a small space heater. So make sure those space heaters are always far away from a wall and make sure nothing is blocking it. Okay. All right, let's keep going. Steps to determine the insurance premium. So here I'm going to give you some formulas. These are important. Write them down. If you just have loose leaf for now, write them down on loose leaf. Okay. So we're on page 14 there. I'm just going to make sure that the formulas are okay. So here are your formulas. Insurance, I'm going to just call this insurance. INS, like that, is equal to table rate which is that table rate will automatically be a $500 deductible. I'm just going to go deduct like that, right? So if it's a $500 deductible, you would end there. If you want that $200 deductible, you take that and you multiply by 1.10, right? Now it turns into a $200 deductible. All right. If it's saying after tax, you want to go times 1.07. How's that for a formula, right? So you basically, this is a fluid formula, okay? So you're going to cover up the parts you don't need. So for example, if the question says how much insurance would you pay if you want a $500 deductible, it's standard, comprehensive, whatever, you go get that table rate, boom, you put it down. If all they ask for a $500 deductible, you would just state that chart, table rate, put it down, that's it. The question goes on to say, actually, you want a $200 deductible, then you would have to get that table rate, multiply by 1.10. You stop. If on top of that, you're asked to find what it is after tax, then you would multiply that by 1.07. Okay? So box this in. There's another one that I'm going to give you. And I will tell you something here that you're going to put down. If coverage you're going to use this one if coverage is within the limit. Okay, so if the insurance that you ask that you're being asked for, right, if it's any number, the coverage is within, right, the maximum limit, so it stays within these numbers that you're provided with. This is for tenant insurance. Watch this. For home insurance, it's a bit more, right? The value, the VOIC calculator is just like the value of the home that the insurance companies assign, right? If you stay within the limit of 200,000 in this case, you would use this one if you stay within the limit. If you're going outside the limit, you go insurance, you go table rate, Watch, this one is a bit more complicated, right? Plus overage times table rate over 1,000. So write that down first, and then we're going to use square brackets here to kind of block this off, because this would give you something specific, which is a $500 deductible. It's a $500 deductible. That's what you would get here. When if you go over past the 200,000, this is how we're going to do it, and I will show you, so don't despair just yet. Then we're going to, let's say they want a $200 deductible. You would take what you got in here and multiply by 1.10, right, to get your $200 deductible. All right, and if on top of that it says after tax, you would go 1.07 after tax. And again, you block off the pieces you don't really need to do so. If coverage, we'll say if coverage goes over limit. Okay, this is what I will say here. Write this down and then pay close attention. So I'll give you a couple of seconds there. Okay, here's the thing. I will tell you this. You know this second formula that you wrote down? This one here? This one is really the one that works for all cases. It's just a little bit fuller. So for example, if you just focus in on this part right here, and like if there is no overage, right, you would just cover that part up, right? And it basically turns into the one that is above it, okay? But if you are going over the limit, then you need to make sure this is there. So if you don't have a lot of space and you understand how this works, this is the one that works every single time, okay? Okay, so let's do a few examples here using the formulas, okay? I'm thinking, yeah, that's okay. All right, you're with me? Hope so. Let's do a couple. Like I'm telling you, after I've done a couple, I think you're gonna get the gist of it. Joan rents an apartment, so I'm gonna highlight that. Works in an apartment and wishes to buy $65,000 standard form coverage, $500 deductible. Okay, what is her annual payment before and after tax? I want both. Okay, annual payment, annual premium, it's the same thing. Okay, so it's apartment, so I need to make sure you understand that. Apartment, right? We use, that means that it's tenant insurance table, right? I won't do this every time, but it's an apartment, so it's a tenant situation. Okay, then I told you to always, you grab the coverage amount, so 65,000, and you ask yourself, is it standard or comprehensive? It's standard. So those two should allow you to come up with an actual dollar amount. So I'm going to go grab my tenant insurance. It's $65,000 standard. So I go here, 65,000 is right there. Standard, not comprehensive, right? Standard is 315. Okay, standard 315. Notice that this is in all areas of Manitoba. So standard is 315. This is your table rate, folks. So if you go up to, technically we're not going over our limit, we're still within. So we just found that table rate. Okay, and this is actually a $500 deductible, which we want, right? So we stop there. Like you basically just go grab that. You have that. We don't want a $200 deductible, so we omit that step. Okay, so this would be before tax. I'll just go before tax. Okay, 315 times 1.07, right? That's this part right here, the 1.07. That would give me the premium after tax. So 315 times 1.07, that's 337.05 after tax. So I'll just go like this to make it shorter, right? So after tax is here, before tax is there. That's how you did the first one, okay? And the next one is Brent owns a house in Metro Winnipeg. So this is owning. Okay, I'm going to highlight that. Own a house in Metro Winnipeg. He wants $175,000 comprehensive coverage for $200, a $200 deductible. What is his annual rate before and after tax? So owning means, right? This is house insurance. This is property insurance. Okay, we're going to use this chart, homeowners insurance. That's the one we need. So how about I use that formula? Insurance is equal to, it's asking for a table rate, okay? And that table rate, if you look at this chart, right, we need 175,000. Look, the question mentions 175,000. And notice this, it looks a little bit overwhelming, but just watch the top here. There's Metro Winnipeg. So the standard and comprehensive for Metro Winnipeg is there. Area 2 has a standard and a comprehensive as well. Area 3 has that, Area 4 has that, but we're now just focusing on Metro. Okay, so it's Metro and we want comprehensive. So you kind of just match, right? Comprehensive and 175,000 coverage at 668. So that's my table rate. 668. There's that table rate. There is no overage, right? So you just basically, you can go plus 0 if you want. Okay. This would be, so 668 would have been a $500 deductible, but we're asked to find a $200 deductible. So we're going to go times 1.10, right? So 668 times 1.10. If there had been anything else, you would have added that. So 668 times 1.10, that's 734.80. Okay, that's before tax. So we're just gonna right underneath before tax. If I want after tax, I'm just gonna go 1.07. So you keep that number on your screen there and just go 1.07, and that is 786 6.24 after tax. Okay, so I want you to get comfortable with before tax and after tax because it's really just one step away, right? So that's how we did home insurance and tenant insurance, and both of them were within the limits, so there was no overage that you had to worry about. Okay. Now, example 3. I don't know if this is going a little bit fast, so I'm going to just pause it a little bit if you want to write this down. Let's keep going. Jill owns a house, so there is that owning part, in Pine Falls, and is within 8 miles of a fire hydrant. That's kind of like a criteria that gets you into area 3. That's the important thing. Okay, so you know the location, you know that this is owning, so this is homeowners, and she wants a coverage for up to 225,000 standard with a $500 deductible. What's Jill's annual payment before tax? So you don't want taxes added there. Okay, so now this is where you gotta watch out. Okay, insurance. Table rate. Notice that we're going over. Like if you have to notice that, right? The maximum coverage is 200,000 on this chart, and then you pay extra for being over that. So what you need to do is, was it standard? I just want to check. Yes, it was standard. So we're going to go all the way to 200 to the max. Go over to area 3. Like area 3 is up, right? This is area 3 right here. Look at my pencil. And I'm standard, so I got to go to 7. Write down the 726 that's at the bottom here. You will write that down. And then focus on the 355 that's above, right? Like, so 726 is for sure what you're going to pay. And then you pay 355 for every $1,000 that you're over the 200,000 max. Okay, so let's focus on the 726 first. Let's write that down and remember 355. So you go 726 plus, we're going to come up with a number and make sure you put the 355 over 1,000 down already. When you're over, you're going to write down that little number. It's a small number that's under the max. Okay, so this is the max, right? Max is 726. You're going to be over. How much are you over by? In this case, it's pretty simple, but you basically go 225 minus 200,000, and that gives you, where do I want that? 25,000. Okay, you're 25,000 over, so that is the number that you put in here. Okay, and I kind of want to put the square brackets in here like that. So if you follow the formula that I gave you, I'm just going to go up here, right? We did the table rate, that's a 726. Overage, we're 25,000 over, that's that overage. The table rate we got right away, which is 355 over 1,000. Okay. Is there $200 deductible? No, they don't ask us for that. We're sticking to $500 deductible, which is like whatever is in this square bracket, that is going to give you a $500 deductible premium. So no need to multiply by 1. I will do this 1.10, right? 1.07. It's before tax. We don't worry about that. Okay. Right? Not $200, no tax, right? So we kind of eliminate that from this big formula up here. We kind of just omit those steps. So now we got to do the math here. So 726 plus, let's do this step here. You got to go 25,000 times 355 equals, then divided by 1,000. You have done those many times. Vehicle finance, home finance. So 88.75. That's how much you're going to pay extra for that extra coverage you want. Okay? In Winnipeg, pretty much every house is over 200,000, right? So this is going to be the case most of the time. So you just add them up, right? 88.75 plus $726. So it's $814.75. Boom, right? That's what they were asking for. All right. Practice. Let's see here. I'm just gonna check. Yeah, okay. I want you to try right now, okay? Try to do 1 and 2. Those are both apartment insurance. Okay, both of them are apartment. One goes over, one doesn't. Try that right now, okay? So let's take, it shouldn't take you that long. So 5 minutes, and then we'll regroup. I'll continue from there. Try that right now with whatever you have, whatever you think you need to be doing, just try it, okay? Or we'll join, okay? Here we go. It's apartment, right? So it's tenant insurance, 65,000 comprehensive. You want a $200 deductible after tax. Yikes, lots of stuff happening. But they need to tell you these things every time, right? Let me do this, otherwise this is weird. Okay. So I need to use this one, 65,000 comprehensive. So 65,000 comprehensive, that gets me to 400 bucks. Right? So it's automatically 400 bucks. So insurance, the table rate, just using the 65,000 and comprehensive, that is 400 bucks. I'm not going over, so technically I can go plus 0, right? Now I need to figure out what kind of a deductible is it, because as it is, it's $500. That's the standard deductible that you would get from the chart. They're asking for $200 deductible, so I need to go times 1.10. They're asking for after tax, so I have to go times 1.07. You can actually do this in one shot if you don't mind, right? So 400 bucks times 1.10, that's 440, right? I don't think I need to even do that. Right, that's 400 because 40 bucks, right? That would be 10% times 1.07. That's $470.80. So I saw a couple of those. Way to go. I don't know where the 370 came from, to be honest. Oh, did you maybe use this one here, the 315? Let me see. 315 times, okay, 315 times 1.1 times 1.07. Ah, I see. Well, that is a mistake I can handle, right? That's an easy fix. But make sure, right, like make sure you pay attention. It's comprehensive, so you got to start with this guy. Okay, that's why I like you giving me answers, because then I can easily tell you where to go, right? It's not a big deal. Okay, so 470.80 is the right answer. Next, apartment insurance. This one is tough, guys, but you know what? I'm gonna do that. I'm gonna do the same thing again. Let's try this one, and then I'll ask you to put that in the chat, right? This one is a little harder. This is the one that goes over. Let's see if you can do this though. Not a big deal if you get it wrong today, right? I just want you to try. So I'll put this on. Well, let's try this. Let's try this, okay? What's the annual cost to insure an apartment? There's that word again. It's tenant insurance for $90,000, standard, $200 deductible, before and after tax. Yikes, lots of words, right? Apartment, I'm sticking to the tenant insurance. 90,000. Oops, I can't do that, right? I'm going up to 75. So this one involves overage, right? Where you're going to go over. I'm at standard though, so I'm going to get that right. So I'm going to go to the 75, the max. Go standard 359, and remember that 450. Notice that for tenant insurance, it's only 450 or 550 for every additional $1,000. So anyways, 75,000, that gets me to 359. So I'm going to go insurance is 359. That's like my table rate. Okay. Plus, how much am I over by? I will already say that I'm going to have to pay 450 for every 1,000 that I'm over. So I'm writing that down. Then I go to the insurance that I want, which is 90,000. Subtract 75,000 from it. That is 15,000 that you're over. That goes in there. Okay, so I write down 15,000 like that. I put that in the square brackets because this would be a $500 deductible. If you crunch those numbers, that's a $500 deductible. But they're asking for a $200 deductible. So I need to go times 1.10. That's going to give me the before taxes. So I'm going to just do that for now. Okay. I will write this down. I will go 359 plus, and I'll figure that out. 15,000 times 450, right, equals divided by 1,000. So that's 6,750, right, times 1.10. So I'm kind of just cleaning it up a little bit. I'm going to add these two up, right? That's 426.50 times 1.10, which is 469.15. This is before tax. Okay. Then I'm going to add 1.07. I'm going to multiply it by 1.07 to get my after tax, and that's 501.99. That's after tax. Okay, so that's the number there per year for this particular insurance. All right. Yeah, you got it, Kayla. It's very rewarding once you get it. Once you figure out, okay, what now? What do I need to do now? Right? It is very rewarding. So let's do it step by step. And basically looking at the table, you should be able to figure out, what do I need to even start? I need the coverage amount, and I need standard or comprehensive in this case. And the other one, it's first of all the area, narrow it down by the area. Then you go, let's do one more, house insurance, and then I will let you go. Okay. So I'll let skip some of them because I will assign them anyways. Let's do question number 5. What does it cost to insure a home in area 3? So you're insuring a home in area 3 for 215,000, you should remember that 200,000 is the max for home insurance. So this is going to go over. You want comprehensive, you want a $500 deductible, and you want after tax. Okay? The deductible and the tax, put it aside for now. That's not the first thing you want to worry about. First, you need to figure out the square bracket thing, which involves getting a table rate, then getting how much you're over, then you worry about the rest. Okay? So let's do this. Insurance is equal to, let's go and get that table. Let's move it up a bit. So 215,000, area 3 comprehensive, right? Those are the things I need to remember. So I'm maxing out for sure. Let's go to area 3, which is way over here. This is area 3, right? And I want standard. So you go all the way down and it's 726. Is it 7? Yeah. No, it's comprehensive. Sorry, guys. I just read it. It's comprehensive. So area 3 comprehensive. So 799. And remember the 391 because you're going to go over, right? You're going to go past the 200,000. So 799 is your table rate plus a number, and that's 391 per $1,000. Okay. This one is fairly simple to find the overage. It's just 15,000, but I'm going to do this anyways. That's 15,000. That's what goes in there. Close that off. Okay. It's a $500 deductible, so I don't need to multiply it by 1.10. Okay. So I don't know if you want to do this by 1.10. I don't need to do that, right? But I do need to do after tax. I need to multiply ultimately what goes in here. It's multiplied by 1.07. Okay. I like to kind of do it like work downwards like this. So I'm just going to go 799 plus, I'm going to figure out what that is. So 15,000 times 3.91 divided by 1,000, 5865. That is the inside of the square brackets times 1.07, right? We're going to need to do the taxes yet. I'm going to go side by side there. So add the 799. That's 857.65. That'd be before taxes, right? So then I take that, multiply it by 1.07. So that's 917.69. That is the answer to that one. Okay. Okay, let me see here. Okay, so I'm going to ask you to do the rest of this. Okay, the rest of this is your homework, and I will post the answer key. Okay, so homework, page 15 basically. Key will be posted. As always,